Alright y'all, we're going to jump right into it and waste no time. I'm going to explain why I switched over to stock options when I was originally a Forex trader. As I explain why I'm choosing one over the other, I am going to explain the difference between the two. So this should be a pretty informative video. We have Forex and we have options. So they both have to do with trading one thing for the other and making the profit of the difference. However, Forex, you are trading one currency against another currency. So that could be Bitcoin against the dollar. It could be Euro pound against the dollar, the Japanese yen against the Euro pound, but it's trading one instrument for another. Options is a little bit more simple than that. You are not trading anything against anything. With stock options, you are buying a stock contract, which one contract represents 100 shares of that stock, and this is the US stock market. So you are buying that stock contract and then selling it back to the market for a different price. And the difference between what you bought it for and what you sold it for is your profit. A lot of people think that stock options is more complicated. It does depend on your learning curve, your learning style. However, I did find it to be a much smoother transition when I learned Forex first and then moved over to stock options. I was able to learn stock options very quickly because I had a lot of basic knowledge and understanding from being a Forex trader. Now, another big difference between the two is Forex is global. Forex has a worldwide marketplace, and that is why it is so popular, in my opinion. I think that's why it's so wildly popular and people love Forex so much. So just that accessibility alone makes it extremely popular, but does that necessarily make it better? That's the thing that you have to ask yourself. Now, with stock options, it is only the US stock market. So with stock options only being able to be traded in America, at least you have to have a United States permanent residential address. It only is open for the New York Stock Exchange time. It is very limited, not only by population, but the hours that you can trade and what you can trade, because it is a US based market. So that alone is why some people won't even have the option, no pun intended, but a lot of people won't even have the option to get into stock options if you are living in another country. So for me, being in the United States, I find that I like the fact that it's US based because of its regulations. And I feel like my money is safer, which is going to be the next thing that we get into. So with Forex, they give you a lot of control. And a lot of people like that, but it can also be to your detriment. With Forex, you have to choose your broker, and your broker is separate from your trading platform. And it's also separate from your withdrawal and deposit process, which I'll get into in the next section. But just know that you get to choose your broker and your trading platform, and it's separate, and you have to connect the two. With stock options, it's all connected. So your broker is your trading platform, and it's connected to how you deposit and withdraw your money. With Forex, you get to choose whether you want to do an unregulated broker or a regulated broker. And this gives traders a lot of control, like I mentioned, but it also can get you in trouble because the thing with this is a lot of traders choose to go with an unregulated broker. When I was trading Forex, I myself chose an unregulated broker. And even though I'm in the United States and I could get a regulated broker if I wanted to, I still chose this option, as most traders do. And the reason why is because unregulated brokers give you more freedom. They give you the freedom to trade almost anything on the Forex marketplace. And one of the big things that a lot of traders make most of their money on when it comes to Forex is indices. That's the NAS 100, that's the US 30, which ironically is the stock market, okay? But a lot of unregulated brokers have taken those stock market ETFs and have applied it to Forex because they know a lot of people can make money with that. And a lot of regulated brokers will not let you trade indices because it's technically not a real thing because it is the US dollar. So it's kind of like trading the US dollar against the US dollar, which doesn't make sense because you're supposed to be trading one currency for another. So that's why a lot of regulated brokers don't even have trading indices as an option because it's technically not really a real thing. But unregulated brokers do allow you to do that, and they also have no rules pretty much when it comes to trading crypto, trading oil, trading all types of commodities that are listed as risky or downright illegal or imaginary. Also, regulated brokers have really high fees. And so those high fees deter a lot of day traders from wanting to trade with a regulated broker, because when you're in and out of the market and you're getting a fee every single time you open and close a trade, those fees add up very quickly. And with unregulated brokers, they don't really take fees like that. They may take a fee when you deposit and when you withdraw, but as far as every single trade taking a fee, much, much smaller compared to what a regular broker will charge you. The biggest reason why I stopped trading Forex altogether is because the unregulated brokers have become unreliable, which a lot of people have warned us unregulated traders about for a while, but we didn't listen. And so the US has really started cranking down on US citizens trading with unregulated brokers, not only because they want you to trade with their regulated brokers and get that tax money and get those fees and all of that, but your money's literally not insured. It's such a huge risk. A lot of people are trading under the table, not claiming it on their taxes. So it's a huge liability for a tax conglomerate like the United States. They do not want you to be trading with an unregulated broker. So there have been times where they have completely paused new US traders from signing up with unregulated brokers. They took the entire MetaTrader 4 off the app at one point, just completely off the app, no notice. And MT4 is the trading platform that most Forex traders use to connect to whatever broker they chose. And so now that we didn't have that as an option anymore, just randomly one day waking up in 2022, they just deleted it off the App Store. That was very scary to me. And so when that happened, I was like, I don't like how the rules are changing so fast, no notice. I don't feel like my money is safe. And then prop firms, which if you don't know, prop firm is when will basically give you money to trade with and you give them a cut on all your profits. And so prop firms are very, very popular in the Forex world because it's a way for traders to be able to trade with a lot of capital without having to risk their own investment up front. And so prop firms started going down heavy in 2023. And I'm like, okay, so people were literally trading with prop firms, making money for themselves and the prop firm, and then all of a sudden the prop firms just deleted themselves. People were not able to get in contact with them. People were not able to withdraw their money. It was a huge thing. And I have personally never traded with a prop firm, but I can imagine how scary and frustrating and detrimental that could be to someone's livelihood. That was scary. So many things are happening in the Forex world with brokers, prop firms, trading platforms, and the uncertainty of being able to deposit and withdraw your money, which was already a little bit sketchy to begin with, because when it comes to, and this is what I wanted to get to, when it comes to how you deposit and withdraw, a lot of brokers only allow you to deposit, and a lot of unregulated brokers only allow you to deposit and withdraw your money through another currency. So a lot of times it's through crypto. So I was having to deposit my money through Bitcoin, withdraw my money through Bitcoin, and this deposit and withdrawal process through Bitcoin and then having to get it to my bank, banks don't like that. US banks, they do not like a lot of crypto transfers coming in and out, in and out. It looks sketchy, it's hard to track, it's hard to trace. It's hard to tax. It's hard to know what's income and what's a loss. This is completely side note, but I actually got denied of a bank loan with my business bank because I had so many crypto transactions. So now as a business owner, which I am, it's affecting my business. Okay, it's now affecting my business. And so, I don't play about the business. So I was like, all right, this is not for me. All right, so this is definitely a no. The broker, trading platform, sketchiness, ever-changing, unpredictability, the deposit withdrawal process, that's definitely a no. Now, I will say a pro of Forex is the worldwide trading aspect. That's great, although it doesn't really affect me because I am a US trader. And I'm gonna go ahead and say that the currency trading just aspect is a con when you compare it to the ease of understanding buying something for less and selling it for more, which is the simplicity of stock options trade. What you're trading is a pro, in my opinion, with stock options. It being US based, for me personally, is a pro. The fact that the broker, the platform, and how you deposit and withdraw your money is with your currency and with all one broker is a pro. I have two brokers, and that is Webull and Robinhood. Those are both brokers. I also can trade on their platform. Like, I execute my trades on their platform. It's all in the app. I don't have to download a separate app. I do not have to download a separate app in order to trade, you know? And then I'm able to deposit and withdraw my money on the same platform in the same app as well. I stuck with Forex a little longer than I should have because I believed that with Forex, you only needed a little bit of money to make a lot of money. With Forex, it doesn't take a lot of money to trade with. I legitimately turned $50 into $800, and that was like in the beginning of my trading journey. And so I'm a believer in this because I've done it myself multiple times. So you can take a little bit of money and turn it into a large amount of money when it comes to trading Forex. And so I thought that that was an independent thing with Forex. However, since leaving Forex, I have started small accounts with stock options, and I have learned that I stand corrected. You do not need a lot of money to trade stock options. You can use a little bit of money, under $100, to start trading with stock options and turn that into more money. It may take a little bit more time than with Forex, but it's a safer, steadier route. So they both have that pro in common, contrary to popular belief. And stay tuned on this channel because I'm going to be doing a lot of examples that prove this, because this has been one of the fascinating things that I've been kind of obsessed with, is growing small accounts using stock options. And so now the last thing that I'm going to put on this board before I erase it and get into some cons, because right now we have all pros with options, but there are a couple of cons that I want to go over so I'm not biased. Forex, it's a lot easier. Hear me out on this. It is a lot easier to blow an account, small or large, okay? Easy to blow. I've blown so many accounts. I've blown 8 accounts with Forex. Guess how many accounts I've blown with stock options? 0. So I'm just gonna put never blown. And the reason for that is because of the way that it's set up. It's just easier to blow. I mean, there's a lot more technical reasons, but I just don't have time to get into it. But just trust me when I tell you that it's a lot easier to blow a Forex account than a stock options account. The thing that Forex definitely has over options when it comes to being a pro is this right here. No pattern day trading rule. And what the pattern day trading rule is where if you have an account under $25,000 with stock options, you are not allowed to get in and out of the market with revolving, this is the key here, with revolving credit. If I have an account that's under $25,000 and let's say my account value is $800 and I buy 4 contracts worth $200 each, that is using up all of my $800, right? I can open and close those contracts on the same day if I have a cash account. If you have a margin account, you can't. If you have a margin account, you can only do that 3 times a week. So let's say I've used up all of my $800 that I started the day with because they are in those 4 contracts. Now let's say by the end of the day, I sell those 4 contracts back to the market and I've made $200 profit as a total, just to get a nice easy round number of $1,000. So now I have $1,000, or I should have $1,000 to trade with. That's revolving credit. With a cash account, which is if you don't have a margin account, then you have to have a cash account. And the margin account is what PDT falls under. So if you don't want that PDT rule, if you have an account under $25,000, then you have to get a cash account. There's no other option. And with a cash account, that $1,000 that you should technically have to trade with, you don't get to trade with that $1,000 until the next business day. So you don't have credit. With Forex, if I bought something for $800 and sold it for $1,000, I'm able to trade with that $1,000 immediately. So you can be in and out, in and out, in and out, in and out of the market pretty much all day if you want to be, because there's no pattern day trading rule. You have revolving credit to trade with. It's your money. There's no processing time of having to wait a whole business day, which you have when you have a cash account. There's no rule of only being able to do that 3 times a week if you have a margin account. So you are able to trade with revolving credit from the get-go, no matter what your account value is. And that is actually another reason why people are able to grow small accounts super fast with Forex, because you're able to get in and out, in and out, in and out, in and out. That will forever be a major pro of Forex as opposed to options. So options gets a big red X for that, and Forex gets a green check mark. Now the last thing that I want to mention that is a pro of Forex, and then I will let you guys go, is with Forex, you have no expiration date. And that is going to forever be a pro when it comes to Forex. So with stock options, every single contract that you buy has an expiration date. Expiration dates are a major con of stock options, especially when you're trading with a smaller account, because of the options that you can afford are usually stock option contracts that are soon to expire. Your contract becomes worthless if you sell it very close to expiration date. So you can't hold these things for too long, because you can also use expiration date to your advantage. I go over all of that in my stock options course. But just off face value, it is a con to have to deal with an expiration date in the first place. And with Forex, you do not have to deal with an expiration date. You're not buying a contract, nothing is expiring. You can technically hold your trade for forever as long as it's, going in profit. If it's going out of profit, you can hold it for forever, but it's gonna, drain out and you're gonna lose all your money, and that's how you blow an account. And yeah, so those are basically the pros and cons of Forex trading and stock options trading, and those are the reasons why I decided to switch over to stock options. At the end of the day, learning how to trade is such a skill, because you can apply your trading skills over to different instruments and you can just pivot with the times. And so like I was saying before, my transition from Forex to stock options was so seamless because I already had the trading knowledge in me, So if you are looking to switch over, do not be scared. I think your money is a lot safer when it comes to you being a professional trader. I think it is the safer route to go with stock options. So if you are interested in learning stock options, I have a 10-hour comprehensive tutorial course on my website. The link will be down in the description box. Subscribe to this channel if you're not already, and I'll see you guys in my next video. Bye.